Hey traders, it's James here from the A1 content team, and as we start today's stream, I want to share with you some exciting news from our friends over at FX2 Funding. FX2 has just launched their two-stage evaluation. The two-stage differs significantly from their one-stage, offering many benefits to traders. First of all, the profit targets are much more manageable, with 8% in the first stage and 5% in the second stage. Next, you'll get a 10% fixed overall drawdown that does not trail your account balance. You get all these perks on top of FX2's existing world-class customer service, high-performance technology, and a choice between two amazing trading platforms, CTrader and DXTrade. There's a reason FX2 Funding boasts a Trustpilot rating of 4.7 in this time of industry turmoil. They are a serious company run by seasoned business professionals and always take conservative steps to protect their traders. For traders looking to get funded, you can use promo code A1Trading15 to save 15% on all funded accounts. That's A1Trading15. The promo code can be found in the link in the description below and in the live stream chat right now. Now, on to the show.
Good morning, guys. Welcome back to another live stream. Hope you're doing well. And we've got lots of stuff to talk about, as always. Seems like every day we've got a lot of stuff to talk about. But that's markets for you. Last night we had actually a lot of stuff come in from Europe. We had some data that was pretty important to the market. If you're somebody who trades, well, anything, this matters because we had a lot of stuff come in. On the PMI side, today is PMI day for sure, because you've got Europe, the UK, even the US coming up pretty soon. We had data in terms of the manufacturing and services performance of the economy for Europe. And let's break this down, because overall the sentiment was a sharp slow. Not good. Not good in terms of economic growth out of Europe. So let's go through this really quick, because we need to understand what we're looking at today. And then I'll give you my bias as we go into today's news out of the US, which is, again, our very own PMI data. Okay, so first of all, the UK had pretty dang strong retail sales numbers. It came out at 2.9 compared to 1.6% forecast on a month-over-month basis. And that's strong stuff. So what that tells you is that the UK consumer may be a little bit better off than what was previously expected. So that's a positive thing for economic growth, but that's about where it ends for positive stuff here this morning. We had in Europe the French flash manufacturing PMI and flash services PMI, both of which came in lighter than anticipated, both below 50. Remember that PMIs below 50 are contraction or slowdown, and readings above 50 is growth. Now, the expected return, or the expected values for these were both, here, and they were both lower than anticipated. That's what the red indicates. Also, the German flash manufacturing PMIs, and remember, Germany is the kind of powerhouse economy of the Eurozone. They're the big one, right? This one also disappointed, which is a really big deal. So European manufacturing and services PMI came out lower than anticipated, pretty much across the board. Finally, we had the same readings come out for the UK at 4:30 a.m. my time, lighter than anticipated in the services section, which is very important for the UK. It is a large component of their economy, just like in the US. So, in terms of manufacturing PMI, came out pretty much in line with expectations. Finally, this morning we also had retail sales. We just had a lot of data overnight, so sorry for the kind of boring catch up here, but just going through the data here this morning. We also had retail sales out of Canada, which were slightly better than expected. So the biggest read I can give you about the summary here is that the European economy seems to be showing signs of slowing. And so immediately that was actually a good thing for the gold world, right? And also good for the dollar, because again, if you see other economies performing more poorly relatively speaking, it looks strong for the US dollar. It also looks strong for gold because it suggests that interest rate cuts could be coming soon. So as we get closer here, we are, well, we're about 20 minutes from the PMI numbers out of the US, which are, of course, also very, very important to the financial markets. And we'll have to keep an eye on that. Interestingly, revised from 50.9. They already revised the previous number. Interesting. Again, manufacturing and services PMI numbers coming out here this morning for the US, which will have impacts on several markets. Let's first of all take a quick look at gold here, see where we're at with this. So gold has had a really impressive couple days here, putting in some higher lows and breaking through this resistance point, which led to a nice little push here yesterday. We had what I would say is a nice start to a potentially bigger move. And we're seeing a little bit of a pullback here on the 4-hour chart. This pullback may have room to pull back maybe to this 23.30 level. I do plan on trailing a stop just to lock in the trade that I've had. I've had a really, really good move here on gold. This position is really going well. Here's my gold position. You can see it's giving back a good bit here this morning, but if it, my goal here will be to trail a stop and just lock in a little bit of profit. So I will do that inside of the VIP room. So stay tuned on that. So in terms of gold going forward, where am I at with this one? Well, I'd probably like to trail a stop below this 23.30 level, meaning I'm comfortable holding gold if it pulls back. I don't mind if it pulls back. That's a healthy thing for an uptrend or a downtrend. But I would have a little bit of a red flag if we, in fact, broke levels of support that we had such a strong reaction to previously. So again, we broke that 23.35 level and we were off to the races. So if we come back to that level and don't see an immediate reaction, then that to me is a sign, okay, it's time to stop out of this trade and take a profit. That would be my breakdown on gold here this morning. In fact, while we're speaking, I am going to go ahead and trail that stop just so I have it trailed. Give me a second. I'm going to be pulling it up. If you hear some MT4 and Discord noises, it is because I'm going to do a quick update on my position here, just to lock in something here on the trade. So just bear with me for one moment. So in terms of gold, what do I want to do with this? I would like to, I've got a second monitor that I'm looking at, so apologies here. I'll share everything in just a second. As I mentioned, the 23.35 level is really where I would like to see price not break. So I'd give it some room here. I'm going to go ahead and put my stop loss. Let's go right here. Okay, and then I'm going to do this on GLD. So I mirror my trades. I use an MT4 platform just to, I have a script that I've written that helps me to share my trades a little easier. So this is where I am looking for, probably right around here. So we're going to go to 1530. Okay. Okay. So I've moved my stop loss into profit. So I no longer can lose money on this trade, which is great. It's a good spot to be in. Cannot complain. What I'm going to do now is I'm going to update my position inside of the VIP room. While I'm doing this, if you guys have not joined the VIP room already, it is currently 50% off. And for stream viewers who are watching with us right now, if you'd like to come trade with us, you get notifications anytime we place trades, live accounts, no nonsense, no demo balling, real trades only. If you'd like to come trade with us, you can find out how to get that huge discount by clicking the link being dropped in the live stream chat right now. Okay, so I'm going to GLD ETF update. going to go ahead and just adjust some things here. And bear with me as I do this. This is sort of a manual process still, but I have scripts that make it a lot easier at least. GLD average entry is 212.87. Stop is 215.30. Okay. And I am just going to also quickly attach a screenshot here. Okay, so 23.27, it's right here. Okay, I'm going to put a stop loss trailed. Okay. What I'm going to do is visibility, all intervals. Okay. Just take a screenshot of this, and then I can share it inside of the group. Okay. All right, that notification for those of you who are members within the Discord is being sent right now. So if you're in the trade, I just shared my update, what I'm doing with it. That is now in the, just head over to the commodities trades channel and you could see what I'm doing with my gold position. But basically just trailed stops, moved it into profit a little bit. We have PMI data coming out this morning, so things could change. But it's been a really good trade so far, and I'm comfortable holding this position as long as we don't, break this support. If gold pulls back, are you adding to your position? That's a good question, but no. I've already got a full position on gold. If it pulls back and breaks this level of support, it is profit-taking time. And if it keeps going, then I'm not going to add any more. I've already got a full-size position on it. I have my max position size available on gold right now. So if it breaks that level of support, I need to get out of the trade and take my profits. And if it keeps going, then great. But I think the move for me was most obvious down here in this level. Now, obviously, this is hindsight speaking, but I really liked this 2300 level. I felt very convicted about it. And I actually already added several times in the VIP room on what I was doing with the trade. So all of those updates have been sent in here. Yes, this is a plug. If you'd like to come trade with us, again, take advantage. It is currently, to get access to these notifications, all of our memberships are 50% off right now. And if you're watching with us here live, we're going to do 55% for people who are watching right now. Click this link, send a direct message to our team. We'll do 55% off the memberships. And just a full transparency on this, that is the biggest discount that we do all year long for memberships. So if you'd like to come join the Discord, now is the chance to do so. So we'll see. Gold will make its decision here this morning. I think we'll probably have some volatility depending on what US PMI data looks like. If you get some strong economic data out of the US, it's going to reverse gold's course here, I think, a little bit further. And it is possible that if we get really strong PMI data, it could compromise the bullish uptrend that we've got recently. But if we get weak PMI data, we could be very well heading back up to kind of our next level. But gold's at a decision point for me right now. Like when you look at gold right now, it's got to make a decision, because you look at the 4-hour chart, you say, okay, gold, lower high. You've got a lot to prove here, because is this going to be a kind of fake out lower high and then we trend lower, in which case time for me to take profits? Or is this just a minor pullback before we take out those levels? That's the question. I think I lean that gold continues to go higher. If I'm wrong, like I said, I will stop out and take profits on the trade. My average entry is 2307. So like right here. So what I'll do is I'll just say this. So my average entry across all my buy entry. My average position on gold spot price is approximately 2307 when comparing it to my actual position on GLD. So you can see it's about the same spot. So 2307 is my entry price. So obviously I have I don't have risk on the table per se, but I have the risk of missing out significantly on the gains that I've made so far, right? Because there is a risk here in the sense that if my trade, does not follow through to the upside, I could be giving away a lot of the profits that I have floating on the account. And it wouldn't be the first time. Would it be painful? Yes, because the trade is going really well in the last few days. I wouldn't ideally like to see it come back and hit my stop loss, but the market doesn't care what I would like or what I would not like. The market does what the market wants to do, and I will take what it gives me, not what I'm not in charge, right? The market does what it wants to do. I have a bullish bias on gold, but who cares what I think if the market changes its mind? So what would change its mind? Probably US PMIs this morning have the potential, not the certainty, but the potential to either continue this idea for gold or reverse it. And I don't know what US PMI data is going to be, but I do know what I'm going to do if price action breaks structure. Hopefully that makes sense. I just wanted to break that down a little bit for you guys. As we get closer to the event, again, I'm still bullish on gold for a number of reasons, but price action wise, if I need to get out of the trade today, I will get out of the trade. It is Friday. It wouldn't be the worst thing to just take profits and move on, but in an ideal situation, of course, PMIs come in a little light, and we continue to see for both of my positions, which would benefit greatly. TLT is another trade I have on, right? Cooler data would be ideal for my account this morning. But again, we will have to wait and see. We're just a few minutes out, guys, from the PMI data. We've got I've got a long position on TLT and a long position on GLD, which is gold. So I am long gold, long TLT. Both of those are sensitive to interest rates. We'll also see what happens here with the indices. Yesterday, Frank and I were talking about this. NVIDIA had a red day yesterday, which is a rare sight to see. I think that there is much more potential for NVIDIA to come down. And I'm not saying as like, I think it's a bad company and it deserves to crash. That's absolutely not what I think is. I just think actually, I want this stock to continue. I want it to keep ripping higher, but I want it to do so in a sustainable way. I want to see a bear case come in, and I want to see the bulls overcome that bear case and take us to new highs. What makes me concerned about this market on the index side is that you've just got a story stock here that is, accounting for most of the gains. And that story stock, if it were to fumble or have some sort of hiccup, which it will, every company faces adversity at some point or another. My concern is that if this thing has some big adversity, for example, there's a couple things. What if competition gets a little stronger? What if other companies in the space start competing with NVIDIA more effectively? What if Apple takes all that cash they've got and they start making their own chips? What if Meta does the same? What if Google? What if the commodity that is semiconductors at some point in the future is not something that NVIDIA can completely control by themselves? There are many potential bear cases for NVIDIA. It does not mean that I'm a bear on it, but I'm saying that when everything is just so cheery for a stock, it can get us into a lot of trouble where you see bubbles form and they can have nasty, nasty drops. Again, the old story I was talking to my dad about this yesterday. It was back in the 2000s. There was Cisco, which looked just like NVIDIA does today. It does not mean that NVIDIA's fate is to do a Cisco move, right? I'm not saying that. I'm saying at the very least, you should be nervous when you see charts that move like this. And, NVIDIA is so important to the whole market, not just stocks, but the entire market. because it is a mood setter. If Nvidia keeps doing Nvidia things, which it's been doing for a while, the concern here is that, again, it creates hype, and hype can be very, very dangerous. It can be fun in the meantime. The trades can be wild. If you've been trading the NASDAQ on the long side, it's been smooth as butter. It's been hard to mess up NASDAQ longs this year. But again, we know that won't last forever, and you got to be open to the idea that you don't want to just kind of go down with the ship, if that makes sense. The dollar index continues to push up off of these lows here that we talked about in the recent live streams. You can see we broke through this level, pulled back, finding some support. It's possible that we are making a bigger push higher. It's especially possible today if you get US PMIs that come out strong. Because if US PMIs come out strong, that's going to be a huge divergence between US and Europe, right? Because if you see, we know European PMIs came in pretty light. PMIs, of course, for the new traders out there, newer to fundamentals. PMIs are just basically an index of how purchasing managers for the manufacturing or services sectors of the economy, how they are feeling about hiring and purchasing and, the future. And if their outlook is bleak, like it is in Europe, if the US's outlook is positive, that divergence could lead to a very strong push in the US dollar. So it is possible. So we'll have to see. Gold, buy or sell. We get these every single news live stream. Let me just be a warning to everyone watching. Please do not gamble on the news events. We don't know. Nobody in this audience knows if gold with certainty is going to be going up or down. You might guess it correctly. You might say it's going up and then it goes up, or you might say it's going down and it's going down. You might get it right. You might get it right a couple of times in a row. But none of us know with certainty what's going to happen to any of these markets because none of us have the data that's going to drive them up or down. We're waiting to see the data. So if you're somebody who is new to this stuff, please be careful. Don't trade news spikes. I'm telling you, it is a disaster waiting to happen. What people don't realize is that if you trade news events, let's say that you're trading gold on a 1 minute candle and you're saying, well, I'm going to just put buy stops here and sell stops here, and nobody can beat me, because you think, well, the market's either going to do this, it's going to go this, and I'm going to make money either ways. But what happens is you put a buy stop and a sell stop, and if you get one of these candles, it triggers both entries and both stop losses, and you lose a ton of money really quick. So please be very careful. Slippage is nasty during these news events, and if you're playing with fire, you're going to get burned at some point or another. Again, I've just seen it too many times. Too many people, get really burned trying to gamble on news events as if they think they know something. They think the market's just dumb and they can figure it out before everybody else. But again, we don't know what the data is going to bring us. Gold could shoot way lower today. And again, for me, the way I would trade news, which, by the way, we've got 1 minute, so let me switch over so I can watch this. The way I do trade news is I use the actual economic data as a analysis component, and I trade with fundamentals in mind. So yeah, we are just about 30 seconds out from US PMI data. Gold sitting at 2350. We've got the S&P 500 pulling back on your screens. Now you got indices here, some currency pairs here, the dollar, gold, and oil. We're coming in about 20 seconds here with the news. Let's go ahead and roll our breaking news. All right, and just a few seconds to go here. Let's see what US PMIs do for us today. All right, and a little bit of initial volatility here. The S&P a little bit lower, NASDAQ lower slightly, dollar slightly higher, euro down, pound down. Let's take a look here. Data still showing as pending on my end. Gold is trading lower, lost about $7 an ounce there. just a second or so. Yeah, so there it is. PMIs came in a little bit higher than expected here, 51.7 for manufacturing and 55.1 for flash services PMI. I'll tell you, I don't think that the stock market's going to love that. Gold's not going to love that either. And again, there it is. Stock market down just shy of 0.5% here today. And if we switch back over to the main market view here, there is that dollar making a push here. Again, fundamentals matter, and that data is going to, that's another check mark for at least short-term dollar strength, because again, we had European PMIs come in light, and here comes the US data coming in strong, showing economic growth. When you compare the notes there, it's pretty obvious, right? The US economy is looking a little bit stronger than its peers. And that might push back the idea of rate cuts a little bit. That is a check mark for dollar strength. And we can see now, again, the NASDAQ not particularly loving that off of the lower time frames. We can see a push through the lows. Gold also not going to love that whatsoever. And an update on my position, as I mentioned earlier, the way I'm playing this is that if we erase yesterday's big green candle, it's time for me to get out of the trade, take profits. And if we can stay in the trade, that'd be great. But again, just waiting to see what happens here with this candle. I'm pretty much, there's nothing for me to do on gold. Either I get stopped out for a profit or we hold support and keep going higher. Either ways, I've got a plan. Okay, so the S&P 500 also seeing a little bit of a pullback here. This has room, in my opinion, to become more, a little bit deeper of a pullback. We've been very, very strong for some time. Each one of these minor pullbacks, Frank and I were talking about this earlier today, these minor pullbacks have been met with a lot of buying pressure. It's a little too soon to say on the day, but so far, this is looking like a red day, potentially. And I think if you actually get a couple days of red candles, it's going to lead to probably a bigger retracement that we have been, I would say, kind of needing for some time. Anyways, guys, I mentioned this earlier, but all of our trade notifications are being sent inside of our Discord channel. Our membership group is currently 50% off. It is our biggest discount of the entire year. If you'd like to get notified whenever we take positions, you can see this is what it looks like. All the trades being taken by myself and Frank, who you guys might know from the live streams he's on pretty regularly. Come join us. It is currently half off. It is our biggest discount of the year. We'll drop the link to that in the chat for you. Come join us. Again, great opportunity to do so. Get some education, get in the chat room. And you, of course, like I said, you can see all the trades and updates on what I'm doing. So with that said, guys, next we're going to be bringing in another person to the picture. We're going to be taking a look at some charts with Kenzo. He's been on the show pretty frequently recently. Good combination of fundamentals and technicals. I'm curious to hear his thoughts of PMIs this morning, coming in just after this quick break.
Attention A1 Trading Show fans. If you're interested in getting free access to the EDGEFINDER or our premium trade alerts, listen up. For a limited time, our show's partnered broker Eightcap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to Eightcap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now back to the A1 Trading Show.
All right, and we are back with Kenzo. Hey, Kenzo, how's it going, man?
I'm doing great, thanks, and you, man?
I'm doing well, and good to have you back on the show. We just had some PMI data come out just a moment before you joined here. US PMIs came in better than expected. We have US both on the manufacturing and flash services PMI coming in higher than anticipated, showing some positive growth in the US economy, at least according to purchasing managers looking forward. So kind of interesting and positive for the dollar, it seems. What are your thoughts on this move here this morning, Kenzo, on the dollar?
Yeah, it shows that actually the dollar is still gaining the momentum. PMI quite positive. So this might be a bullish move for the rest of the day. But Yeah, I don't think maybe it's an aggressive economic news, but at the moment, yeah, we are going to see the market moving very nice, going in favor of the dollar. But that is not really good in the long run. I feel like they're gonna still have a problem cutting the rates because we are on a race where everything that is coming out at the moment, we just think about the rates. Are they going to cut the rates or not? So, and if we see positive stuff like this, it's good for the economy, but we don't really need too much positive at the moment.
Sure. Yeah, no, that's a good way of putting it. We don't see a very weak economy by any means, but we also want to see some cool down in order to get those rate cuts to come into the picture. So market is not particularly happy with the idea of, well, if that economy keeps going, if it keeps, growing quickly, what that means is that a growing economy hires more people. Hiring more people means more spending, and more spending ends up being essentially more inflation potentially. So, yeah, it's something to pay attention to. Another one that I wanted to ask you about, probably the chart of the day, I would say, Kenzo, is this Nvidia move. Nvidia is currently down another 4% today, and that's saying absolutely nothing, because if you look at the chart on a weekly chart, it is not, it's barely pulled back, but it is a very important piece of the indices. I mean, I don't know, for even I think index traders are now picking up on just how important Nvidia is to the story. If Nvidia cracks, the whole market cracks with it, in my opinion. And Kenzo,
Yes.
this move here is already, doesn't look that big, but that's already 11.5% drawdown from the highs. If you were the person who bought Nvidia on that day, your position is already down over 11% very quickly. So I don't know. What are your thoughts on Nvidia this morning? Does this have room to keep going, and what could that mean for indices?
Yeah, I think it might be looking bad for 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 Nvidia, but I think it's also a good thing because that was maybe the big boys are taking their profits on Nvidia. We did have like the whole 2 weeks, or let's say the whole month of the hype still going higher. But I think one way or another, we have to get a sort of a reversal before maybe we see another push to the upside. And we know the hype of AI. It's actually still very hot. There are companies that are working with Nvidia left and right because of AI. So that shows that even though we might see those sells, I think it's just a matter of technical analysis. One way or another, the market will be reversing on that. I don't really see that as a crash or something. I think it's just a good reversal that might happen. But one way or another, we're still going to see some serious push.
Sure. Yeah, I mean, it's such a it's climbed the ranks to become the most valuable company in the Nasdaq here, and now with that place, it also commands a lot of, with that weighting, it commands a lot of control as to whether or not the Nasdaq continues higher or not. I'm curious, Kenzo, from your perspective on the Nasdaq. We're starting to see, at the very least, the potential formation of a pullback. I think it's a little too soon to say, because as I was mentioning earlier, just before you joined the show, if you take a look at the S&P 500 specifically, you can see these little blips of pause before another big green candle higher. My question is,
Yes.
looking for to determine if this is just another blip before another push higher, or how do you tell, or what are some signals to look for that could indicate that this is maybe not just a small pullback, and that maybe this is a bigger one starting to form? What do you have any thoughts on that?
Yeah, sometimes it's quite difficult to determine that, but those type of moves actually they show the strength of the market. It shows that the market was aggressively on that bullish move. So on that, I think you just need to understand, have a structure or a strategy that you can use to know when it's time for you to have that buy. Like on your structure there, I can see you have a lower support, or maybe it was a previous resistance there. I think that area is where maybe we can think about a better reversal. But those other ones where it's just two candlesticks, those they shows aggressive bullish move. It's just a smaller. Unfortunately, the market won't just move up with one candlestick, but the market has to have these smaller breaks before going even higher. So I think that actually shows the bullish momentum. But maybe I think also on Nasdaq, maybe we might have also the same reversal that we saw on Nvidia. Remember, Nvidia has like a serious market cap. So it has a serious percentage on Nasdaq. So once they sell, we'll see an effect on the overall market, especially on Nasdaq. But we are still on that overall bullish move. But maybe we will see a reversal, but I don't really hope to see that very quick. If it happens, it is still fine. We will still continue going with the trend because the trend is still very bullish.
Sure. Yeah, I tend to agree. I think that this has been a very, very hard year to call a top on the Nasdaq or to bet against the Nasdaq. Technology stocks are so so strong recently, and while that can change, I think that I would agree that the path of least resistance here for a pullback on the Nasdaq is, I think, there are probably a lot of buyers waiting to pick up that pullback if it happens, and so that thought gives a lot of confidence, I think, to bulls, and that's why bull markets usually lead to bull markets. When the stock market is strong, when indices are strong, it usually continues for a very suspended period of time. Same thing with metals as well. Metals are very, very volatile here. You've got silver pulling back 3%. The gold market is pulling back almost 1% on the day. I mentioned earlier, I've got a stop loss trailed into profit on this one, and if we break this level support, I'm going to have to go ahead and call it quits on my position, close out for profits on it. But what are your thoughts on gold here today, Kenzo?
Yeah, on gold, I was expecting a continuation of that bullish move. On my side, I was expecting to see a nice bullish move. So we did have a nice trade from this breakout here. So it seems like with PMI, the market is reversing. But I still believe that we are still going to see a nice continuation of a buy if it doesn't really continue going down. So I'm expecting maybe to see something like that. Maybe we will get a nice structure going further like that. But at the moment, I will just wait and see. But it seems like the market is just trying to give us a very nice retest around this level. If it continues, then I think we will have, if it respects this level, I think we will have a very nice push to the upside. But if it continues, we don't really have any choice. We'll just have to wait. It will be showing us that it's aggressively on a bearish move. Then we'll have to actually think twice.
Yep. No, that's fair. And again, markets across the board pulling back here today. As I mentioned, the S&P, the NASDAQ, the dollar is up a lot today. We talked about that as you first joined the show. I kind of think that we might see the dollar kind of complete this move up to the top of this range around 106.5. From there, will we break out or not? I don't know. We'll have to see. What would get us to break out of that would probably be, like a really strong jobs data point or a really hot inflation print, meaning higher than anticipated, something to reverse the course of the Fed's idea of cutting rates would probably be required in order to get the dollar index to really break out. But even so, even if it's not the idea of it wouldn't take much in terms of keeping the dollar to go higher, because right now, what seems to be the story here, Kenzo, is that today specifically, we have European PMIs coming in light and the US PMIs coming in strong. They're cutting rates. The Fed is kind of just holding rates. That seems to be the dynamic that's giving the dollar bears some struggle, myself included. I would like to see the dollar go lower. I have some positions, of course, that would benefit from that. My gold longs, as well as my TLT position, which has given back a good bit of profits here this morning, just off of this, yields jumping a little bit off the idea that, again, PMI data coming in strong is going to cause yields and the dollar to pop higher off of strong economic data. So we'll have to see in terms of the dollar where it can go. What about like the euro and the pound? Are you watching any currency pairs right now, Kenzo?
Yes, on pound, actually, I was just watching. It's breaking my support area. I actually had a very nice support there. So, but I was expecting the market to actually go to the upside. I was expecting a very nice push to the upside, but it seems like the market is continuing to go down. I think we saw some PMI also. They did release their PMI. It was not really good. And now US just released their PMI, which is positive. So it shows us that, yeah, it's not really good for GBP. So I think we will see a continuation of a sell, especially when we broke that support area. So it shows us that the market is not really holding up with the market. I was expecting to see a very nice uptrend, but on a 4 hours time frame, at the time it reversed, it started to show us that it was a sort of it was like a sort of a consolidation structure. If I can draw a resistance on top, the market was just playing around the same level. So I'm expecting to see the market maybe continuing to go down. We're no longer on that potential uptrend structure on GBP.
Sure. Yeah, I'm interested to see where the pound goes with this, with all the currency dynamics recently. The difference in the Federal Reserve's kind of holding rates for longer compared to the kind of difference in the US to Europe, which is now cutting rates. We saw the Swiss National Bank surprise cut rates yesterday, which was a big deal and caused the Swiss franc to weaken quite a bit. I was actually short before that event and got stopped out. I trailed a profit on it. So kind of a week for me that looks like I might be taking some kind of small profits on positions, which is not ideal, but at least they're not losing positions. I'd rather take small profits than losses. So it is what it is. Again, dollar Swiss and several dollar crosses are moving here today. We got dollar yen breaking through this high, which is interesting to see yet again. The dollar yen comes up to a big level of resistance and breaks through the highs. Again, another trade that's been hard to mess up in the last few years really has been a lot of dollar yen longs have been very, very successful at just kind of continuing the rally, continuing the push beyond each level of resistance that we hit. So very interesting to see that there. And we'll see. Do you have any thoughts on dollar yen specifically, Kenzo?
Yes. Dollar yen, actually, dollar has been aggressive, way too aggressive against JPY. So yeah, and we've been actually on this bullish move for quite some time. We've been looking for buy positions, and at the moment, it seems like it's already broke out of that resistant area that we had. And I'm still hoping to hold that trade for quite long because the overall structure or picture that we see, it's actually a very nice bullish move. So we have a trade above that resistance. I think maybe the PC is a bit slow on your side, but on my side, I can see that the market already broke out. We're expecting to see the market going even higher. Plus, we know very well that if maybe the dollar did not really cut their rates, so their rates comparing to JPY, there it's actually in balance. So it makes the dollar to be quite stronger. So that's why it's easy to say we can just follow the trend and just hold our buy positions.
Yep. And again, it's been a lot easier on the long side, that's for sure, just with the dollar strength over the last few years really against the yen. With that said, Kenzo, I want to thank you for coming on, not just today, but several times this week and helping us out with the A1 Trading Show. We really appreciate all your help on everything. Also, for everybody who's listening, if you have not already checked out Kenzo's YouTube channel, we're going to drop the link here where you can find uploads from him on a regular basis. So make sure go subscribe to Extra Hot Forex on YouTube. Keep up with Kenzo and what he's got over there. Some great free value for you. Kenzo, thank you very much for coming on the show today.
Thank you very much, man. I'll see you on the next one.
All right. See you on the next one. All right, guys, we're going to keep pushing along here. We've got our next guest coming in just a moment. Before we continue, I do want to just remember to remind you guys, we are currently doing our biggest VIP discount sale of the year. That is currently 50% off. If you have not already taken advantage of that discount, we've got a couple of people on my staff standing by to set people up with memberships. If you click the link being dropped in the chat right now, you can speak directly with someone on our team about that 50% discount. But also for live stream viewers right now, we're going to be doing 55% for anybody who messaged us during the live stream. So that is an extra discount for our live stream friends and supporters. So again, click the link being dropped in the chat for that, and you can get access to the VIP group, get access to every trade we share, coaching webinars, chat rooms, and so much more. So there you go. We're going to take a quick break. We'll be right back with Chris Pulver coming in after this. If you're looking to add fundamental analysis to your trading, then look no further than our software tool, the EDGEFINDER. The EDGEFINDER allows traders to approach the markets by simplifying fundamental analysis into simple scoring systems. We look at economic data, technical readings, as well as sentiment analysis like the commitment of traders data to help traders spot potential opportunities in the markets through the use of data. Our tools allow traders to find top setups each and every day from the top setups page. You can also browse the latest institutional money flow through the commitment of traders data report that we've generated to make it very easy to read. And on this report, you can see everything from the latest overall net positionings, as well as the week-to-week buys and sells from institutional money. The EDGEFINDER also has a retail positioning tool, which allows you to see what the crowd is thinking about your favorite charts, symbols, both currencies, commodities, and indices. You can also check out the latest seasonal trends, month to month, week of the year, and much more to spot potential opportunities coming up in the future. The EDGEFINDER also makes economic data much more easy to read, like our GDP charts, our retail sales numbers, PMI data. We can also check out the jobs data, unemployment claims, and so much more. At the touch of a button, you can check out the latest reports from the economic data that moves the markets. Right now in the live stream chat, we'll be dropping a link where you can speak directly to a team member about getting yourself set up with a copy of the EDGEFINDER today, and we'll give you a nice live stream discount. Click that link and chat with the rep to find out what kind of discounts are going on right now. Now back to the stream. All right, and we're back with Chris. Hey, Chris, how's it going, man?
Nick, happy Friday. What's up, dude?
Friday. Good to have you back on the show, hanging out with us, taking a look at charts as always. A little bit of a pullback here, and I was making my joke again yesterday, Chris, about NVIDIA and having to tap the screen to make sure it's real, because NVIDIA was down, well, it's down another 3% today. It was down 4% yesterday, and dragging the market down a little bit with it.
Yes.
I say dragging, but it's not much of a pullback yet. I mean, I'm curious your thoughts on this, whether or not this has the room to become something more, or is this just another blip before another rally higher? What are your thoughts?
Well, yes. I mean, I look back to what we did with this previous sell-off in March. I mean, that was a pretty substantial sell-off. There were some inside candles there. We double topped and then sold off through the April move. I do think that this puts a little bit of a pause on the rally. Obviously, if it rips higher, then that is, to me, like the blow off top, where once that, okay, let's take this in two scenarios. One is if we go bearish day yesterday, indecision today, and next week or even early trading next week, we come right back up with a rip to the upside. Either that double top holds, or if this thing goes higher, then we're talking just straight up capitulation. Look, it'd be nice to be long with a move to the upside, but that would, to me, come a little bit more crash worthy back to the downside. So let's see if we have a bit of a reality check. Right now, there is some responsibility of NVIDIA to not be a crazy, ridiculous stock, because it is now like jostling between like 1, 2, and 3 in the world, right? Microsoft, Apple, NVIDIA, they've been all over the place the last couple of weeks of which one has the largest market cap. And so, I mean, if NVIDIA is going to be traded like a meme stock, that has a lot of repercussions for the markets when it comes to just overall volatility. So I think putting a pause in this rally would be a good thing. I think as we go into Q2, there might be some heavy profit taking. And I think that's what really this week looked like, is we just had some profit taking on these large tech stocks. I mean, Apple's had a big rip, NVIDIA's up and could do no wrong. We see a lot of stocks and sectors sitting near these all-time highs or very close to it with overbought conditions. So I'm just curious if we have some heavy profit taking today. I had a silly assignment on my SPY. I had an iron condor that was assigned, even though today is the expiration. They decided to assign me the day of expiration. So I'm watching the SPY closely. I do have some levels that would be noteworthy. So my SPY today, if we see a directional push, we just kind of tap these intraday lows from yesterday. This was yesterday's low, and we're just sitting right around that. Directionally, if we can push and get a fresh break below, let's say 543, that opens up the move towards 540. This is the biggest level that I'm watching on the day. So if we see a bearish push, 540 is my target. If we hold these lows from yesterday, then we look at a gap fill, and there's really no harm, no foul. But today, I think there's like 5.6 billion, or it can't be trillion. I would say maybe it is trillion. This was a market watch indicator. Yeah, $6 trillion in options due today. So we had AM, we have aftermarket expirations, S&P, NDX. So basically your NASDAQ, your Russell, your S&P, tons and tons of dollars expiring this morning and this afternoon at closing bell. Again, that should mean volatility, but I don't always love zero DTE trades. So NVIDIA is definitely the tell. Yesterday, the market sold off. Why? NVIDIA was down. Apple was down. Microsoft was down. We have said this for weeks now. If you have your largest companies with the highest concentration in the markets, if they fall, if they decline, if they're red, the whole market's going with them. So I don't know, Nick, I'd like to see NVIDIA head a little bit lower. I'd like a reality check to some of these rallies. I'd like to try to buy a dip if I can. You just got to wonder if maybe the gap fill from last week is the target. Maybe that's all the market gives us, is a little correction towards 536, 537 on the SPY. What do you see price wise?
Yeah, no, I think it's possible in terms of the concept that Frank and I were talking about this morning is these little pullbacks on the SPX. I've got to pull it up. Have been so aggressively bought that
Yes.
the follow through was so impressive. Like every time you'd get these big pushes lower, a long wick would form, and then a follow through push to the upside would occur. Long wicks on the bottom, and then follow through moves to the upside. Long wicks, follow through. So I'm just waiting and seeing what happens today, because if we get a close today that looks red, I mean, even yesterday's SPX candle here was a close that looked, it was more red than not. But you can see it closed in like the lower third of the candle itself, the full range. But from a candle perspective, I would be hesitant to think it's going to follow through anywhere to the downside unless you finally get a day in which you close near the lows. Now, one thing you could mention is that NVIDIA actually did close near its low yesterday. In fact, you can see there's the close on yesterday's candle. Nice little strong red body candle. Actually held some of its bearish gains, and then gap down here this morning. Again, I think if you're going to see a follow through move, keep an eye on NVIDIA, keep an eye on the SPX, and if you get a bearish close, then I would say that the likelihood is very much that okay, now a red candle close at the end of the day, psychologically that would do to a lot of people, it would say like, oh wait, where's the buyers? The market didn't immediately snap it back into positive territory for the day, and if that sort of settles in, if you get a rebalance where markets can go down, and that realization comes into the pay, the picture again, I think it's very possible that we see a move down to like 53.25 on the SPX, or the other mention I would say about the indices specifically is we just tapped 20,000 on the NASDAQ here. The NAS 100 hit 20,000 on the dot. That's a huge psychological level there. And so hitting that 20,000 mark could be a short-term, kind of checkpoint where, the bulls take a break. I think it's very, even if you're very bullish on this market, it's very okay to think like, hey, we've had a really good run here. It's maybe due for a little bit of a reality check, just to remind everyone that there are reasons that stocks can go down, that things can, there's a bear case somewhere. And right now the bear case has been hiding for a little while. And whenever that happens, I get a little bit nervous about staying overly bullish on stocks.
Sure. Well, let me ask you this. Was your portfolio overall yesterday positive? Did you actually have a P&L up yesterday, considering the market sold off? The NASDAQ was down about 0.8%. The SPY was down about 0.3, 0.4%. You did or did not?
I did, and it was really nice
Did okay.
because
Yeah.
I only have 4 positions right now, Chris. My positions are so simple. I've got TLT longs, gold longs, S&P, and XLK, but I've got covered calls sold on those. So
Okay.
those are well, in the money at this point, which is not ideal, but they're netting each other out pretty much on the days. So the returns on my index holdings are offset, and then on gold yesterday was positive. Today's giving back a lot of those gains. I do have a position on that. If we break this level of support, which very well could happen here, I'll get stopped out. But huge sell off on gold this morning. Same thing with silver, down 3%. What are your thoughts on the metals?
Yeah, well, I was asking about the P&L for the overall portfolio because I as well. I mean, it's funny because Monday I was red on the day and the market was up, and then this week it's actually net P&L was positive despite the sell off. So that shows me that I'm pretty well positioned for if we do have a downturn. I've got some good cushioning to the downside. I'm playing some of the downside, but I think that the technicals I'm looking at right now. I mean, I would like to see the pressure remain to the downside. I'd like to see it play out today, see if there's a decent direction. It's like if we don't have any direction today, then it was all Monday, which is to me really stupid. But what do I know? But on the weekly charts, this could be setting up for a nice little evening star. If we have a long wick to the north, I've been talking about this the last couple of days. If this pressure puts a little bit more, let's say this green candle is just a sliver of green, or even turns red. To me, that's a nice indecision candle to then lead for some follow through going into next week expiration, which is also a quarterly expiration. So if we have an evening star on the SPY weekly, if we have an evening star on the Qs weekly, this looks really good to me that the market can finally show a bit of a turn and put some pressure to the downside. And like I said, I hope it continues today, just because we have so much expiring and most of the time options close out of the money. I saw that the call option volume sentiment is like 11-1. So you guys can see that on the EDGEFINDER. Like, it's so bullish right now that I'd almost like to see those buyers be razzed a little bit. On the metals, yes, like you said, big sell-off, but I think that it's still the same consolidation that we've talked about. Big indecision candle for the weekly gold move, big sell-off on the day, but this doesn't really change anything on gold for me. This is still the same kind of broadening pattern look, where I'm just going to watch kind of levels like that. We could come and test certain levels, maybe test 2270 to the downside, but if the bulls step in there, I think that's a good opportunity. I did put a bunch of collars on yesterday, which is I buy a put for any protection to the downside, and I sell a call and I finance that. So it doesn't cost me anything. If I get called away on the upside, it's profitable, but I still have downside protection. I thought that was an important thing too. But again, any stocks that I own, I want to make sure that I'm at least protected both ways. So gold, it doesn't really change anything unless we breach 2270. Otherwise, that's a level of support. Silver, you had mentioned this on the stream. I don't know if it was when I was with you on Monday or it was the time last week. We were looking at that trend line on silver right there. So this trend line is holding, and I'm just waiting to see if the bulls will step back in and get us into some nice confirmation buy territory. Hopefully take this up towards 35, 36. But, again, you got to watch and see how does price play out here. If we breach this trend line, are we going to come back and retest 26 on silver before we get an up move? I still like silver better than gold, but if we're just correcting, we're just not getting the big confirmation I want to see. Buyers to me would be emerging there. If we're really going to see silver head up, maybe outperform gold again for another stretch, that's my silver trade. Gold, I'm just going to wait, let it play out. I wanted to ask you about crypto. Are you following Bitcoin prices at all?
No, not well, a little bit. I've kept an eye on it, just out of curiosity. I don't have any positions on it, but I have, I've heard on social media, just the people talking about how bad the altcoin world is, and which is, not something I really follow closely, but it made me think, like, man, if altcoins are bad right now and Bitcoin is still near the all-time highs, altcoins can get a whole lot worse if Bitcoin struggles. But anyways, in terms of Bitcoin specifically, I have been talking about, I want to build a position on Bitcoin over time, not a big one, but some Bitcoin exposure would be great. I've been watching like the 60,000 level. I might pick up some longer term positions on it, but we'll see. What are your thoughts on it?
Well, I have these, these two chart alarms, which is really all I'm watching. So, I mean, I think it's still range bound. I had said this morning that if we get between like a 60K and a 56K, that that is the window that the bulls better step up their game. If the bulls are absent and we get a breach below 56 and 55 and this thing doesn't rip back to the upside, what I'm looking for is if we have a bear trap, let's say the price is just kind of slowly meandering lower and we get to this like 56K mark, if the bulls don't snap this thing back up, I am a little worried about, how much lower this thing goes, because there are some pockets and demand levels down here. We have previous highs, but if we take out a majority of this rally, that does make it pretty vulnerable. But until that happens, right now, this is a strong support level. We could slowly come down to there to build up that demand right around that 60K to 56K level. If we come back up to the highs again, you're just looking at a range, right? A range trade on Bitcoin. I would like to think that this thing, and it's been weird. I mean, the Qs have made several all-time highs this year. I mean, I want to say the NASDAQ, I know, or the SPY, I want to say it's notched like 30 to 31 all-time highs this year. The Qs, I'd have to double check how many all-time highs we've hit, but it's had to be something comparable to that. We probably had like close to 30 or 30 plus highs on the NASDAQ this year. But if the Qs are making higher highs, or maybe it requires the markets to make all-time highs again, will Bitcoin get some love in 2024? Obviously, we don't know. But I don't think that if the market is down, that we're expecting to see all-time highs in Bitcoin, right? It's like, I think we have to have the whole enchilada going up for Bitcoin to make all-time highs, right?
Yep.
Dollar's getting stronger, Bitcoin's down, dollar's up, gold's down. I mean, the dollar is pretty strong. And to me, this is the first time that we've finally breached the level I've been talking about, which is 105.60. I still want to see how the day closes. I still want to see how the week closes. And of all the dollar crosses, Nick, my favorite one, and the only one that I'm actually in for this dollar strength, well, not only one, I shorted the euro dollar this week. That was a fresh trade. That's a new trade. I'm shorting on the euro dollar because it's the heaviest weight in the dollar basket. And I'm still long dollar CAD, and I'm still long dollar Swiss. I'm not in any of the currency pairs. The Aussie dollar is a trash position right now. When you look at the charts, it's sideways. New Zealand dollar, same way. Pound dollar, same way. Dollar yen, not touching it. But everyone should be watching that 160 level, because the dollar yen has been pushing up the last few days, and we're coming right back in towards that 160 intervention high. So we have this is 1, 2, 3, 4, 5, 6, 7 bullish candles in a row. If we come back and retest 160, you're probably going to poke the intervention button by the BOJ. If they do, that's going to show how powerful that 160 level is. If they don't, and we break 160, then there's another, annoyingly higher leg where the JPY just stays weaker, and there's nothing you can do about it outside of enjoy the carry trade. That's it. So got to watch that 160 level.
That's a good point. And Chris, I wanted to also, I was scribbling when you were talking about Bitcoin a second ago. I wanted to show you this horrible drawing that I made. The yellow is this is my thought on it, is like stocks. So stocks, and the blue is Bitcoin. So I think similar to, you could also draw one more in here, which I'm going to call the A for ARK Fund. So you've got the S&P 500. I think if the S&P 500 is trending higher for a while, it takes some time before the risk curve to catch up to the super high risk stuff like Bitcoin and ARK. So if we're looking at like this scenario, if you actually see the stock market like start to go, really parabolic, like everything starts to rally, that's where those things I think would like really outperform and like launch past the S&P 500, is if the, unprofitable tech companies start popping into everyone's, mail inbox, and everyone's buying them and rushing into things like that. I think Bitcoin lives in the same neighborhood as like ARK stocks, like unprofitable, high, beta, high risk, high return kind of stocks. So I don't know. I just thought I would mention that, if people are wondering why is it Bitcoin doing way more, it's because yes, this bull market is a bull market right now, but it's kind of a hated and narrow bull market. It is not a very loved, spread out, everyone's feeling
narrow. Narrow is like narrow. All capital letters, dude.
Yeah, very, very narrow. So with that said, it's Chris, I'm gonna back out. I want to. Did you have one more thing you want to say? I didn't mean to cut you off.
No, to your point, like, I've been trading for a long time, right? I thought Mag 7 was narrow. This is Fab 3. This is the trifecta. Like, come on, man. This is ridiculous to see so many stocks underperforming and being carried at these levels, and also seeing the divergence between the Dow and the Russell versus the S&P and the Qs. And look, if you're long the SPY, you're long the Qs, you're basically long the same stocks. If you're long tech, you're long the same stocks. Like it's all very, very concentrated, which can still run. And I've listened to some content, read some reports this week. I mean, I've seen both cases where there's a lot of things to be cautious about, blah blah blah. But I've also read a scenario where there's so much that the market is going to look past that we might just continue to rip higher and higher and higher because fiscal policy is still fairly loose, right? Fiscal policy, not monetary. Monetary policy. I mean, I looked at this morning, Nick. The Fed is still by the watch tool still expected to cut in September. Now, the Fed keeps saying they don't want to cut. They won't cut. We need to see inflation data. We'll see a round of inflation in July for June's print. We'll see a round of inflation in August for July's print, and another one for August and September. So we still have 3 months of waiting to see what the Fed's going to do, what the Fed's going to say. Watch this CME watch tool jump around for the next 3 months until there's something actionable, good or bad. And it's going to be annoying, but I want to know, like, can the market move without 3 stocks driving it? And can the market move without the Fed? And if it doesn't, then that's the current deal that we're in, is like maybe we just see some sideways price action, but you never know. I don't know.
Yeah, no, I mean, it definitely feels like this market is very much all in on a couple names, and it's really carrying the whole thing. So I've got Frank. He's going to be joining the show here just behind me. I'm going to step out. I got to do a podcast with the Market Insights Market Pulse podcast. It's my that's my contributions. But with that said, Chris, thank you for coming on the show here. You can take over with Frank for a moment. Guys, if you're watching with us live, make sure if you're on Twitter, it's at Real Chris Pulver. You can find Chris, keep up to date with him. And also at the same time, he's got his own YouTube channel. We'll be dropping the link to that if you're watching with us here live on YouTube. Make sure to go follow him, subscribe, find his content there. And Chris and Frank, you guys got the show from here. We'll be right back with both of them. We'll set up the cameras, get you guys going just after this quick break.
Thanks, Nick.
Yep. We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Webull. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Webull is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show.
Hey, Chris, how's it going?
Frank, happy Friday, man. How are you?
Pretty good. How are you? Happy Friday.
Pretty good. Happy Friday, dude. I could not have asked for Friday to come any sooner than it did. This has been an incredibly long week, not from trading, from other stuff. I had a live session this morning. I've also been, my little side hustle has taken on a whole new demand this week with junior golf camps in the evening. So it was controlled chaos all week with kids from 5 to 10 years old. Everyone had fun. Cost me an arm, a leg, and ice cream and snacks all week, but it was a lot of fun. So I'm just happy that it's over. Get a little chance to decompress for a few days and then tackle it next week as well. But markets wise, it's been nice to see some P&L to the upside, despite the market, being a little bit indecisive. I'm watching today on the SPY. I keep mentioning this, if we're going to have some direction, I like the 540 level on the SPY. I was going to take a long strangle today or a long strangle for Monday, but it was going to cost me about $3 in change. And I thought, well, what would it look like if I just went out to Friday? It only cost me like $2 more to go out to Friday. So I have a trade right now on the SPY that is a 545 by 555. That's on the upside, and a 544 by 530 on the downside. So I'm looking to see if, we had triple witching today. We have quarterly expirations next Friday, the 28th, to finish up the week in the quarter. And so I'm trying to get a little bit of volatility. This only cost me about $5.70. If we have an average move, what just happened there? 544. Did they just fill me? Son of a biscuit. Well,
you just took a trade.
I guess that trade worked out. Well, I didn't put in what trade just got filled. This just got a bunch of buying power back. Let me check the SPY. It must have been filled 544.35. Okay. So this would have been all right. That's fine. I'm just going to put this in for the same thing. So I was assigned on the iron condor that I had in the SPY. This one was showing a bit of a margin call, so I had to get out of the SPY position. I have to do the same thing here. So let me do a quick maintenance check on this one. So this SPY, I have the shares. I still have my long call. If I close this out, let me see. Let me see if I can get like 544. Let me see if I just get 544 and close it with the combo. So we're 543 and change.
This is your strangle, you're saying?
No, it was an iron condor that got assigned. So I'm fine now. I had basically what happened was I had an iron condor on the SPY. My bull put side was way in profit. It was way down here at like 480 by 475. But then I had a 542 by 547. So clearly the calls were tested. And the dumb thing is today was expiration, and the broker decided to assign me. So I got assigned on the position. It doesn't matter. I still have a defined risk on the trade. It was like a $4 risk on the trade. So that's my net loss. What I was kind of hoping for though is that price would push lower, because I was assigned at 542. If price did push down in the day below 542, then I turned that assignment into actually profit, and then I still have my bull put spread that's in profit as well. But anyway, I took a small loss on the trade. Ended up taking about a $2 loss. On this side, took my profit, but net should be like maybe a $3, $4 loss net. That's all. So anyway, it's fine. But the good thing is now buying power wise, everything's back where it needs to be. Every account's back up with lots of option and stock buying power, and that's exactly where I want it. So overall, I mean, even though the day is kind of indecisive, yesterday was down. I was up 12K yesterday. Today I'm up about $3,000-$4,000 and still watching. So it is what it is, and going to see what happens for the rest of the week. I did make a kind of this executive decision on the SPY as I'm tracking it. If we see a decent sized sell-off, I'm not looking to get super greedy on the SPY. If I get back up here to some fresh highs at 15 or 16 bucks, I have a call option that should be worth maybe $1 or $2. I'm going to take the profit and run. I also this week on all of my own positions, I have some type of protection. On the I got assigned on CV, or I took the assignment on CVS, and price today, if it stays above $60, which looks pretty promising, I get the stock called away for about $6 a share. Chewy, I put in a covered call at 27.50. Baidu was the one that really needed the most help. I put in a collar position on Baidu. What that means is I have a covered call that I sold, but I also have a long put in case this one wants to head a little bit lower. So I like Baidu. I like Alibaba. I still keep talking about these China stocks that nobody seems to like. And, I mean, fundamentally, these are, this is big tech. These are cash cows, but they're just not getting a lot of love with a lack of follow through in China. So I still like this potential double bottom area around $80 on Baidu. I still like the potential look of a double bottom. Again, this would be Baba not cooperating, but if we came back down to like $70 or even tested this, this would have been a 2022 low around $64, $63. I'm still long in these positions overall, but it's going to take time. Clearly, the one thing we're seeing is U.S. market has made all-time highs. China has not. Japan has not. Europe has not. That's the weird part. We have U.S. outperforming on the coattails of three stocks. We have underperformance for the most part of the higher percentile of stocks are underperforming. It's a very, very narrow, very thin market rally, and you just got to wonder how much longer can that continue? If we don't have a broad market participation, you got to wonder. Somebody posted this earlier with this blackout period. Yeah, Jamie posted this. Enter a blackout period for the market coming into earnings. Do you think there'll be a good chance for a pullback? I mean, it would make some sense that we have some profit taking going into Q2. We have a little bit of this window where there's not a lot of earnings plays, and this is all, just kind of summer trading as we head into maybe a more important Q3 with the Fed in September. So I would like to see a pullback, and technically it would make some sense. But again, you just have to wonder, like, how aggressive does an NVIDIA sell-off get? How aggressive does an Apple or Microsoft sell-off get? If you had to pick, Frank, volatility-wise, would you rather be, long, short, NVIDIA, Apple, Microsoft? If you had to pick one of those three, like, what's your big horse in the race? What's your secretariat? Any of those three?
If I were to be short, is what you're saying?
No, if you had to pick a direction, and I guess longer term you're probably going to pick bullish, but it's like if you wanted to be bullish right now, which one would you take for upside potential, but also least amount of drawdown? What would be your pick of those three?
I mean, I don't know. I don't know if that's a fair question because NVIDIA is a good pick, but it has probably the max risk of drawdown out of those three.
Agree.
Short term, we're still in that uptrend. Nothing is broken. The S&P pulled back. We hit our targets for this month, which was 5,500, and
Yep.
what we saw then was just a small pullback. I think this is just profit taking. I don't think this is telling us anything really. I think like in a week from now, we can look
Yeah.
at NVIDIA's chart and see it back up to like where it was. I think it was like 130, 140. So really nothing.
Yeah, P's around
Nothing
140
major
and change. Yeah.
Yeah, so I do
Okay.
like NVIDIA,
I
but I don't want to buy
yeah.
it right now.
So you're long
I don't
NVIDIA?
want to buy anything. What did you say?
Yeah. Well, I said so you're choosing NVIDIA. I mean, I have a ratio spread on NVIDIA. I'd love to get assigned on NVIDIA. My assignment price would be I have a 95 by 80 ratio spread because as soon as this thing split, I put that trade on. And so, I mean, we'd have to have a catastrophic correction for me to get assigned. But if I did own the shares, I would get assigned at $80 with a $15 buffer. I would own NVIDIA at $65, which
I
obviously
think
that'd
you
be
do
very welcome considering we're just at 140.
right here
What's
at
that?
where NVIDIA is now at 125.
Uh-huh.
You could say you do like an iron
Yep.
condor play. Because next week it's either going to be back up at the highs or this correction is going to continue. So I think, give it
Okay.
like 15,
Let's look at
20
it.
point run. Next week, I'm pretty sure
Okay, let's
price
look at
is
it.
not going to be anywhere near here.
So
that's
let's
just me.
go NVIDIA. Yeah, no, you make a good point. Let's go out to I mean, I guess we can see. So next week is quarterly expiration. It's a weekly expiration on Friday for NVIDIA. Let's go out 7 days. Let's see what this is going to cost us. The nice thing is because of the split, we have decent liquidity. There's obviously tons of volume in this stock. IV is 65. Expected move is about $8. Let me see what a daily, weekly expected move is. So we have a weekly at 1068. Well, that could be, I mean, this could be pretty cheap, dude. If I did a 126 by 125, so you're paying for all the expected move, that is for sure. To the downside, maybe a 115 to the upside, maybe a 136. Maybe we give ourselves back to the highs at 140. And then the lows, I mean, if I'm going to go up $14 that way, I might as well go down to $14 this way. Try it, make it kind of equidistant. So I could pay $669 for a stock that, if we have enough volatility, either one, retest the high, which would be a $16 move, or two, drops back into maybe a $10 move. So I think, Frank, you just talked me into a trade, dude. So you're better at doing that than most. Usually I don't listen to anybody. No, that's a good point though, because it's way more affordable with dollar spreads to hopefully see some direction here. So I'm going to take a trade here for about $6.70. I'd like to see if NVIDIA has like a, $10+ move. If it does, this is going out to next week. It's not that expensive. I'll go ahead and take this trade. Let me go like 675 or less. And that should be, I mean, maybe it can at least sneak like a safe dollar in this trade, but if I can get more, that'd be pretty sweet. So I'm going to try to go, let me go like 670, see if I get filled on this trade. 670, we're at 125.20. I could make this a little bit cheaper if I go 124 right there, but I'll keep it pretty close. Yeah, we're looking about the same price between the put and the call, same price. So I'm going to go 670 or less on the trade, and everyone's going to get some love on this trade, dude. Frank, good trade, man. I like this. I'm gonna take it.
Well, don't thank me yet.
Well,
I don't know where it's going to go.
Don't thank me yet, he says. Spoken like a true trader. All right, let me go. I'm going to replace this one. I'll go 675. Point is, I like the trade. I'll take it. So,
but let me tell you some reasoning behind this too. Is that this pullback is among several pullbacks we've seen where the market looks like it's going to retrace and then it rips higher. So I'm saying either in the next week, the S&P is going to come back up to where it was or even higher, which is past 5,500. I think we hit 55.1. But
Mm-hmm.
if it breaks that, that's a good sign for the upside. But if it breaks this trend line that we're on now, which is a pretty major support level, I can see volatility taking us lower to a farther out support level, which will probably make that move work out too. So if you're looking at a
Sure.
$6 move on Nvidia, which is essentially the S&P right now, I think
Right.
I think it's reasonable.
Yeah, I do too. I'm going to go out to the 28th. I'm doing a 126 by 140, and I'm doing a 125 by 111. So I'm looking at $14 of upside for a trade that cost me about $6.76. And the expected move, just based on the IV rank, is about 770. So if we hit that or exceed that, great. If I get an expected move on the nose, I get about $1 profit. $1 profit of a 676 debit. So 1 divided by 6.76. I'm looking up like spot on with that 15% take profit. I really like these trades where I can get 15 to 25%. If we have a big move one way or the other, even better. I'm giving myself a little bit more upside where I could get, for a trade that cost me $6.76, I get $14 a max, which means my upside is about $7.14. So, or I'm sorry, $7.24. So I do like the trade. Yeah, I mean, it's a good trade. The other trade, like I said, I'm doing a ratio spread all the way down here. The odds of getting filled there are slim to none. But if we have high volatility on Nvidia, for better for worse, that's a good thing, because I'm just looking to see over next week if we have a little bit of follow through on this bearishness. If we do, great. If it comes back, like you said, and rips back to retest the highs at 140, that's a $14 to $15 move. That is more than enough to pay for the cost of that debit and give me probably $5 or $6 in net profit. So
now the question
man.
is, do you think that's going to happen in 1 week?
Well, that's the trade I took, so let's hope it does. I mean, because the other trade is I could go out 30 to 45 days and play, the longer term trade, but it's just gonna cost me way more. Yeah, I'll pay a lot more if I did the same trade. Let me do it. So let's go, Nvidia. Let's go out instead of trading for next week. Let's go out
Let's
to.
think about it too. You're paying 6 something for this move. The average weekly move is 10, you said, right?
That is correct. Yep.
So if we hit like 4 or 5 points up or down Monday or Tuesday,
Mm-hmm.
I think you're gonna see some profit at least,
Maybe
early on in the week.
If I match, if we get like a $5 or $6 move with the intrinsic value, I know, and look, a week is not a ton of intrinsic value, so the time is not going to be great, but it will be enough to probably see, I'd say 50 cents or $1 profit. And I might just take it, right? I might just take it if it's immediately paying me on Monday. I might just take the profit. I could also recenter it, go out not just to next week, but the week after, and do the same thing. Now let's see what that trade would have cost me if I went out like 42 days. I would do a 120. I'm just going to do a 126 even. And now the implied volatility is around $17. You're paying $17.80. So you're getting all of that priced into it. And if I went out, 40 days, obviously I'm paying a lot for that. Now to the upside, maybe if I'm going to pay for, $20, I'm going to sell. So it's 17 and change on the expected move. I'd probably do a 146. So I get, $3 on a 146 and then I guess it'd be a 106. And so I can take what is a $17 debit, pay $12.80, $12.90 for it. Same type of thing. If we see a $13 or $14 or $15 move out of Nvidia over the next 40 days, you and I both know that's extremely possible. For the sake of this trade, I'm going to mirror this trade with just a bigger window. So I'm going to take the same trade on Nvidia and do the same thing out 42 days. So I'm going to an August 2nd. Let me make sure there's no overlap with some of these positions. Nvidia, I know I have my ratio spread that's out to June 28th is what is this? 111, 125. Oh, that must be my ratio spread there. And then, So also after the 10-for-1 split, I had a bunch of broken wing butterflies that were put in and recalculated. So all these like 65 and 65 and 64s, those are broken wing butterflies that'll be probably profitable by today. So this will clear up for a lot of profit. Let me figure out what this one is. So I have a 95 by 80. That is my ratio spread. And then I have a 1. Oh, I'm so stupid. It's right here, dude. This is the trade I just took. Next week. This is the trade that I just took right there for $6.76. So that's the trade I need to watch. I'm going to go out to what was my position here? 42 days is an August 2nd. I'm going to take the same trade here, Frank. I'm going to see if I can get $12.95 or less. Okay, $12.95 less on the debit, and I'm just going to put everybody in this trade. So this gets some. Not filling at $12.95, huh? You sneaky dog. All right. Mid price is $12.92. So I don't want to pay more than $13. I'm going to go $12.99. Final offer, says Drew Carey. Fill the $12.99. All right. Similar order. Let me get this in. So $12.99, 9732.
That's not bad. Paying
It's not bad.
$5 more for way more time.
Correct. Not bad at all, actually. It's actually I'm happy with that fill, and surprisingly, it's not a ripoff. Probably the ripoff would be just buying calls, even though that could be one directional, that could pay really well. But I want to play both sides and expect to see some volatility. So hopefully that is the case. And let me just get a couple more fills in here. So 9151.
When's our next big news event for the U.S.? Next week's going to be kind of quiet.
Yeah, I think we're going to have some pretty quiet trading. Make sure these all got filled. That's filled at $12.95. Filled at $12.99. Okay. Filled at $12.99. Filled at $12.99. I think these are all filled at the price that I wanted. So $12.99. I was hoping for a slightly better debit fill, but it is what it is. All right, $12.99 on that trade. All right, dude. So I'm going out. This is another NVIDIA trade. This one is out to August 2nd. August 2nd expiration. And that contract size should not be 3, whatever account that shows. That's not right. NVIDIA. Okay, those are all 1s. That just was a misprint. So the trade is 8/2 expiration, 126 by 146. And I have symmetry there where it's a 126 by 106. So I'm going after a $12.99 debit for a $20 max profit. And expected move would be 17. I think it was 1770 was my expected move. The weekly ATR is almost $10 and change, so like almost $11. I mean, heck, if we have one good directional day with intrinsic value on that trade, I'll probably get that thing to pay me hopefully break even or better. But I mean, obviously I'd like to see a $15 move with some time left in that trade could probably get me up to profit. But I just want to see a big fat move on NVIDIA one way or the other, dude. So yeah. Let's see what we do. So far, actually, at a trade that I looked at this week, I don't know if I talked about this on the show. I think I did on the 0 DTE strangle. Let me show you what this one did today. So I'm pretty sure it's positive already. SPX trade. It was a 0 DTE, so it would have been this afternoon. The center trade was 54.70, so it was a sell leg at 5,500 and a sell leg at 54.35. And then I did 20 points wide on that. So 55.20 and 54.15. Oops, that's a buy trade. So right now, this trade was trading earlier this morning at 305. It's already down to $1.75. So my profit target was hit. That's a win for $45. That's a win. And then what I'm tracking as well is by the end of the day, does this actually reach full profit? So if price truly stays inside where it's, it's below the 5,500 and it's above the 54.35, then that's full profit, and that's $3.05 on the day. So, I mean, this is a study that I was really interested in for some active 0 DTE, a trade that look, it's been an hour and 20 minutes through opening bell, and you're already hitting your 15% take profit, and this one's actually decayed enough that you're up around $1.30.
Wait, so instead of selling a strangle, you're selling a iron condor or something?
It's a synthetic strangle. So because this is the SPX, which is obviously a very expensive instrument, I can't just do a strangle on this without costing me $100 grand. So this is I go wide on the iron condor, so it treats the sell legs a lot like a strangle, but I obviously have defined risk. So max risk on the trade is $1,800. That would be a price blew through one of my levels. But the idea is you take the trade, get enough credit up front, try to go after a very aggressive take profit at 15 to 20%. And get out.
How much did you pay again for or how
didn't
much
pay it.
credit were you?
Yeah, 305 collected.
Okay,
and
nice.
Yep. So I mean, again, if you didn't do anything, you've got an hour and 20 minutes into the trade, and it's already up at $130. So I mean, you have $3 of max profit with all the risk to the end of the day. Or I mean, if you're $1.30 into $1.30 into a $3 move, you're up 42.6% on the position within the first hour and 20 minutes. Not a bad trade. So
Yeah.
I'm tracking this. This is something I want to kind of prove, proof of strategy, proof of concept, and make sure that these, what these windows are for me is if I'm going to start taking this trade myself personally and do this thing, kind of every day, I'm looking at this kind of, by 9:45 or 10 o'clock Eastern time, placing the trade, staying somewhat centered, letting the market be, noisy, choppy, not a lot of movement for maybe 30 to 60 minutes, and having this trade hit that 15% take profit and be done trading by like 11 or 12 p.m. Eastern time. So by noon, it's like, I want to be out of this trade. And maybe my hard stop loss would be by noon, if this thing's not profitable, just getting out of it. Maybe.
Yeah.
And because you're so much more vulnerable in zero DTE, if you go all the way to the end of the day, the deltas, the gammas, the thetas, it's way more sensitive. And they move so fast that if you're on the wrong side of the move, you're toast. You can't do anything. There's no plan B in a zero DT environment. So that being said, if you have all the value up front with that time, and that time decay is very quick in the first couple of hours of trading, that to me is a really easy way to grab like those very aggressive take profits. So, in hindsight, it's like, oh, it's great if you hold it all the way to expiration. But the point is just take the profit, be done, take it the next day. You're only trading like a 2.5 to 3 hour window at most. And I've seen a lot of these trades, Frank, by, 10:40, by 10:50, by, 11 o'clock, this trade is done and already giving you like a 15 to 20% take profit on your position. So just
you're
food for thought.
taking this trade at 9:30.
Yeah, I'm waiting like until like 9:45, 10 o'clock, because the first reaction of like a gap open gap, it's just really noisy. And so if you wanted to center it right at opening bell, it can be a little choppy. So I kind of let the first like 5 to 15 minutes play out and then put it in, still grab a decent amount of credit for it, and then see price kind of chop around a little bit. If that's what it does and it chops around for 60 minutes, I've seen this trade pay out. Right now I've been tracking this since last week. So 1, 2, 3, 4, 5. It's 4 out of 5. Since last week. We didn't have a trading on a Wednesday, obviously. So I started talking about this, nerding out into this last week, diving into the study itself. And now I'm looking to trade it, for real. But I want to get, maybe 50 trades logged, maybe 100 trades logged, and just see what the windows are looking like, and then kind of build my own, rule set around it. So this could be something that, we talk about a lot more as far as just daily activity. So I would like it. Let's see if it does its thing.
Yeah.
But so far, so good. I mean, this trade's already done. You're done trading. There's your, 40, 50 bucks on the day. Bye-bye. Treat yourself to a nice breakfast.
Zero DT does seem like a good way to go when you're in an environment like this where things aren't really moving.
Sure.
I mean, aside from yesterday and today, but for the most part, if you go to the 5-minute time frame,
Yep.
these are not great moves. These are very small. So if you can make a narrow window and still collect a good bit.
Yeah. Well, even yesterday from opening bell, like this move right here was enough to get you 15%. That choppy move in the first hour of trading, that got you 15%. Even in the afternoon, if you took the trade again and recentered it, it finished right where it started. So I mean, there were probably 2 trades yesterday you could have taken it and had this thing pay out. So again, there's a lot of sensitivity to zero DTE. There's a ton of risk. It's exponentially more risky than going out like 30 to 45 to 60 days. But the validity and the efficiency of the options market is still the same. Yes, there's more risk because you're so much more sensitive on those Greeks, but it works the same way from start to finish. And the one thing that's on your side as an option seller is the theta decay is so much faster from like that first chunk of the day. Like if you take the day and cut in opening bell to closing bell into thirds, you have a really big chunk of theta decay that first third of the day. And that's exactly what this trade profits from, is just getting in, being somewhat directionally neutral. Price doesn't go anywhere for maybe 60 minutes. And that's enough to grab a quick profit and reduce the volatility in the trade. So again, I'm interested in some more data. Like, the study was done by Tasty Trade, and they were talking about taking this all the way to expiration or all the way to end of day. And if you hit your take profit, obviously you take profit. But if you don't hit your take profit, I want to know what the average loss was, because if you take the trade and lose, you can lose the full boat at $1,800 and you're walking away with, $50 profit. So to take 30 days to make up your profit is going to suck. But the reality is you're rarely going to lose the full $1,800. So that's why you want to be quick. You want to be aggressive. And like I said, I might, if I start taking this trade live in my accounts, I think the trade is going to be by noon. I'm just done regardless. I don't care if it's a winner or loser. It's like I got to be out by noon, because it gets way more vulnerable to the the risk side late in the afternoon. Just my thoughts.
Right.
So we could talk more about that if you're interested. It's an easy trade. You if you can trade SPX, can you trade futures in your Webull account? You can, right?
Right. Yeah, I can.
So you could trade SPX. It's an index trade. So SPX, NDX, you could trade that. They're cash settled. So anyway, it's good for taxes. And you're automatically given like a 60-40 split if you trade the index futures or index options. And, there's no risk of assignment, which is nice.
I
So,
could
anyway,
try it for like one trade a week or something,
it's true.
but I couldn't do it every single day.
Oh, yeah,
Unless
that's true.
I took
That's
one
true.
for one DT, so I could hold on to it for one day and close out next morning or something.
Okay.
But
Which on that note, I mean, I can look and see. I mean, I don't know, maybe obviously instead of taking the trade, like I'm gonna keep building like the kind of hypothetical, right? I'm gonna test it every day. If I've
yeah,
got a 90+% win rate, that's good, that's valid. But I'm also looking to see by what time is this trade done. Like right now, it's 10:50. The trade's done, so I've already tracked it on my spreadsheet. So this is done by 10. Let's see, $1.30. So $1.70 debit by 10:50 a.m. Eastern time. And then so the trade's in, the trade's a win. That's we're batting about 80% right now since last week. And I'll keep tracking this, and I have a feeling this is, I mean, Tasty Trade did a study, it was a 94% win rate. I know that gets a lot of traders excited, but you have to understand there is risk in the trade. And so I don't like the idea of holding it all the way to expiration. I like the idea of this trade is good for maybe the first 2 to 2.5 hours of trading from 9:30 to noon, and just call it what it is. It's a winning day, it's a losing day, but be done with it. Because if you get out by noon, you still have some time left to not lose everything on the trade. But you might take a couple $100 loss, and you're going to have a backwards or an unfavorable reward to risk, but a little bit. But
yeah. As long
I
as you're
did the numbers. Go
watching
ahead.
it,
What's that?
as long as you're very quick and you're watching it, then
Yeah.
you should be fine, because then you wouldn't have to realize a full loss, or I guess you wouldn't really want to wait till expiration, but you could realize a full win. But I think you're right, and just getting out when you're up. You collected almost 50% because you paid $3. So you paid it. You collected $1.30.
Yep.
So close enough, but like that's for one day. So you do that
For
every
sure.
day. That's really good. I'm on the other hand, options are not that expensive right now. I'm looking at
It's true.
SPY and wondering, how many times could you just buy a call at the start of the day or at the end of the trading day, and see it open higher, or see the end of the day move to a higher price.
Right.
So if you buy like an in the money call, they're usually like 0 DT is probably $1 something. 2 days or one day out is either $1 something or $2.
Yep.
So if you do that, if you buy a call, how much more expensive could it get, and what are the odds that price moves higher? That's what I'm kind of looking at, because it is risk defined. It's just a simple trade. It's just buying calls and puts if you're looking to the downside, but puts are more expensive than calls right now, which is
I know they are.
kind of interesting. But
Yeah, there's
I'm
definitely some
looking
put
at
skew.
I'm looking at SPY, and we saw it gap lower. I'm like, I mean, what are the odds it comes back and fills the gap? I think
32%, I can tell you.
we have a pretty good chance of seeing that happen. And then I don't know, just kind of playing these short-term plays just because we don't really necessarily know the direction other than in this market, we're in a huge uptrend.
Yep.
So until something breaks, the trend is likely to continue. Let's look for upside and
Yeah.
let's make it short term because I don't think this run is sustainable, but I don't necessarily think it's going to crack in the next 15 minutes or 3 days or whatever. So that's just my outlook right now. I think I'm just looking at buying calls and just seeing where if they end up, working out.
Yeah, and I mean, look, if you have a plan and you stick to that plan, you have a methodology. Also, the one thing you're doing with just your little strategy of just focusing on buys only is right now you maybe saw me like write this on the chart, 54% to 46%. Right now, going back 70 years, the market already has in a baked in 54% bullish bias. In an uptrend, it's even higher. I mean, I don't know the exact number, but I know it's greater than 54% because if all you did was focus on longs this year, every single day or every couple of days, this market wants to grind higher. And day after day or week after week, it's trying to stretch. And so the last couple of weeks, I think what's been, I mean, to me, it's like I can always have something to complain about if I want to, but we've only had like one directional day that drives the market. So this week it was, freaking Monday was a directional day.
Monday.
Tuesday was nothing. Wednesday was not a trading day. Thursday was like a retest of Monday's breakout because I think that was an inefficient day. Like that was a weird directional move that it's like Monday's direction. Again, my opinion should have been last week's volatility. The fact that the market did jack squat after CPI, even during FOMC, and it's like nothing happened. And then Monday the market decides to rip. And I don't know if it's because it's a holiday disruption. It starts to hit, stretch and hit that 550 level. You and I talked about 550 to 545, or I'm sorry, 550 to 555, and we hit 550 on the nose, and we've turned a little bit off that. So I think right now 550 might be a bit of a pause point, but is the market satisfied with a correction of around 1.3%?
Probably.
Maybe. I mean, we have seen 1 to 2% be plenty. 1 to 2% is plenty for these bulls to just step back in and just buy everything.
Yeah, and I just looking back on the past several months, every time we see a pullback like this, there are talks of, is the market going to correct? And then it doesn't. It just comes back up. So I think when people say they want to wait for lower prices, this might be the only chance they get on lower prices for a while.
True.
Every time you see a pullback, and although it's not ideal, it's just the way things are right now. We've seen the past 4 or 5 months, every time the market dips, and you can see like on your chart right now on that daily chart, it's happened twice before this time. I believe that was April, and then one in May, and then this month. It seemed like a steep drop, but it's just another pullback. So,
yep. I do not disagree. Yeah, I don't disagree. And when you said nothing is broken, you're totally right, man. I mean, we've talked about this for the last couple of weeks. If nothing is breaking, if this bull trend is intact, if this trend line is intact, look, we could have price go nowhere, right? We could have price go sideways before we officially were to break a trend line. We could even have price correct a little bit deeper than what it's already doing right now for that 1.3%, and then still have a buy on the dip with the trend line support. So to me, this market would have to, really wake up the bears to say, okay, this is a legit sell-off, because what we did last time is we just got up to this crazy extension, went sideways, finally had a breakdown candle that was enough momentum to drive it lower for the month, right? So that just is nowhere to be seen on the chart. Like one little red day does not make a bear market, right? One day does not make a trend. And so, I mean, obviously I'm paying attention on the daily time frame. If we struggle to break the highs and we go sideways, if we struggle to break 550, fine, but we can go sideways and still have this be intact and a breakout is still available, or the bears would have to step up and actually show confirmation. That's one thing we're missing, Frank, is we're not getting strong, obvious bear confirmation. Traders right now that are trying to be short are calling the top, and that has not worked at all, right? I was wrong for a month. I was wrong for a month calling the top. But the nice thing is my trades do this. Here's my position. If it goes up, I make money. If it goes down, I make money. I was okay. But when I was short, I was still doing the exact same trade and I was making money on the downside versus the upside, you know? So I just think right now it's like it's the same trade. It's just what can wake up the market for a bigger move one way or the other. But if we go sideways, I'm going to take that 0DT stuff I'm talking about. You know, it's like if it works for the first 60 to 90 minutes of trading, that's an easy $50. If I just do one contract, it's not that much risk. It's manageable. It doesn't cost me a lot of money. It's way cheaper than, you know, just doing a strangle where it costs me 100 grand on the SPX. So I can tie up, you know, $1,800 and just piecemeal maybe $300, $400, $500 a week together. It's not bad. That adds up pretty nicely.
If we see today that this candle does not really move and it's already recovered most of its losses from today, if we see that sort of sell-off just sizzle out, I mean, I don't really see a reason why it wouldn't go back to the highs. So
agree. And yeah, I mean, let's look at this for the last. We've had a pretty good run here. I'm not going to lie. Let's go to like a 30-minute chart. So for the last 1, 2, 3, 4, 5, 6, 7, 8, looks like 9 weeks, Frank. We have 8 out of 9 bullish weeks. That's a pretty good run. Let me check that on. So this is always my 5-minute chart here. Let's go back to the actual weekly chart. Is that right? 8 out of 9 weeks on the week. Yep.
So why not just
so since April? 1, 2, 3, 4, 5. We had an indecision. So 1, 2, 3, 4, 5, 6, 7, 8, 9. We've had 7 out of 9 weeks bullish.
Just buy 1 week out then, or buy at the start of the week and 8 out of 9.
Well, look, you have the bias to the upside. Like, so are you saying that your side you're just going to trade? You're going to trade just the upside. You want to focus on the trend, the direction. You want the path of least resistance. Makes perfect sense. Okay.
For now, yes.
I'm a little bit more hedged. I'm looking for smaller take profits. If I get, if I pay $5 for a debit and I can close it out at $6 or $6.50, I'm going to take the profit. Yes, I'd love to see the market, drop and tank and make me $10, $15, $20 and have unlimited profit potential. But for me, profit is profit. If I grab 15 to 25% each and every time, high probabilities, lower the volatility of my portfolio, trade both directions. I like that. I like that every couple of weeks I'm still making money, whether the market's up or down. I like the fact that we had a sell-off this week on Thursday and my portfolio is up. I like the fact that I've got protection if the market decides not to cooperate. So that's my job, is to make sure that I'm not surprised by anything. We go up, good, I'll make money. We go down, good. We go sideways, I've got other things working, So, and there's all sorts of ways to trade it, obviously, but I don't know, man. That's just my approach. I also listened to a really interesting podcast on the road this week, and this guy was just talking about simplicity in general. And he was a big, just indexing type guy, but a traditional 60-40, or working with people that maybe you want more risk, you do like an 80-20 or 75-25, but really just sticking to the plan of buy the haystack, buy the whole market. He's like, whether you take fish from this sector or fish from this sector, it's like they're all swimming upstream, or they're all swimming downstream. In case, I guess, in a bull market, they're all swimming downstream. But he's like, if you buy everything, which is basically the S&P, and that's kind of your balance, or you buy the whole stock market, like I know Nick has like the VOO, or you can buy the VTI. I mean, there's all sorts of ways to trade the whole market or the entire global market. That would be like your 65 to 75% allocation to equities. If you want, if you want bond exposure. I mean, I don't know about you, man. As a trader, I don't really care about bond exposure. I truly don't, because I think bonds, even in a good market, are going to underperform. I could be wrong, and the bond market might make this crazy rip, but I just don't see the appeal of a bond market when I could just go out and park a certificate of deposit and park a money market instrument for 5.25%, 5.5%. That's better than bonds, in my opinion, where you have, you got to wait for maturity on a bonds, and the price could actually dip because yields are still questionable whether they go higher. So, I mean, if anybody is, I don't want to take any risk. A money market instrument is still attractive at 4.5% to 5.5%, whatever you can get out there. I would just say make sure you're going with a too big to fail type bank, so you're not worried about any type of regional bank crisis, or that'd be the one thing I'm worried about. When that happened to Silicon Valley, I was like, just be careful of what banks you're doing CDs with. That's all.
I'm not that strongly biased towards having diversity. I think what I like is focusing on what you like to trade, focusing on what one thing you like to invest in, or a few things. I like keeping the basket small and focusing on something that you're that you really do believe in. And, you know, there's so many currency pairs, so many stocks and indices. I think just focus on, you know, what you know and what you've been doing and what makes sense to you, and going from there, because you don't have to make money by doing a million things. You can,
Right.
and people are really good at it, but I like the simpler approach of just finding that one thing. And so that's more so where I am. I don't invest in a bunch of stuff. I just kind of I focus on one thing, and that's about it.
Yeah, I agree. I think, look, being concentrated is not a bad thing. Obviously, for those that are concentrated in Nvidia, it's a great thing. You know, if that, I would look, I was pretty bullish on. I still am. I mean, Amazon has been one of my big reasons that, you know, my accounts are up, you know, 30-40% the last couple of years, because I put together, like, I took about a 10% stake in Amazon. It's been up a lot. I've traded a lot of options around it to kind of increase my gains and juice my leverage a little bit. But you know, I don't have a lot of stocks that I own. I trade a lot of indexes. I trade a lot of options. I'm diversified with those options. But as far as what I own, you know, I like you and I talked this week on Chewy, right? I'm still in my Chewy position, which I have a covered call at 27.50. And part of me, since our conversation, I'm like, you know what? I don't really want to get called away at 27.50. But if it does get called away, I'll make like $10 a share, roughly. If it doesn't get called away, then I'll just add another covered call. And I want to try to keep it, you know, like lower delta, like 15, 20 delta. So that way, if it's going to get tested, we're getting tested with a bullish move, as opposed to a repair trade. Like CVS, for example, I bought CVS when we had a crazy earnings gap to the downside. And all I had was, well, since 2013, since 2019, since 2020, this is a stock that actually, just like we saw back in 2020, 2021, if you have these crazy discounts, I mean, this was a stock that hasn't been this low since 2020, which hasn't been this low since 2013. I thought, well, we could probably go up. So I bought some shares. I put on a covered call. I got it out of the way, and I'm flipping this for like $6 like today. If it stays above $60, I flip this. It's taken me maybe, let me see what I bought the shares. It shows May 1st. So May 1st now, I've held the shares for about a month and a half, and flip it for, you know, $5 or $6 a share. Like, that's not a bad racket, you know. Make $500 or $600,
No,
and if
that's
I
a
can
great
find,
trade.
you know, yeah, it's like if I find 20 stocks a year that do that, it helps me make an extra $5,000 or $10,000. That, you know, it's adding 3, 4, 5% to my bottom lines. Like, that's good, man. I can do that all day. So again, it depends. Like, I don't want to own everything and anything, but what I do own, I do have some conviction around. And I'm curious where things go. So a lot of options, not a lot of ownership, but what I do own, I try to, you know, repair aggressively, or I try to lower the cost basis aggressively. So when it does turn into profit, it's bigger than what the market gives me. If there's a, you know, a $4 to $5 move in the market, I'm hoping I can grab a net like $6, $7, $8 of profit. And if it's a bigger move, great. I mean, like Nvidia, for example, if I took ownership of Nvidia, dude, I'd try to make, you know, $50 to $100 a share on Nvidia. I'd be willing to go out and just stay out of the way, roll my calls, and just stay out of the way. But if it goes up aggressively, there comes a point where you can't roll your calls for credits. And if that was a thing, then obviously I don't want to roll them for debits. I don't want to increase my cost basis. And then you just take your profit, get it called away, and then reposition. So
Yeah.
anyway, all sorts of ways to do it, man. But look, today, for a triple witching $5.6 trillion, you know, up for grabs, it did come back and fill the gap today. So the 68% probability of not filling the gap was wrong. 32% probability of filling the gap was right. And it's not a huge surprise that we had, you know, a really wild Monday that was kind of unexpected directionally. We had a holiday on Wednesday. We had one directional day Thursday, and the market basically, Frank, just finished flat for the week. There's not a lot of clear direction on the week. We're at 544 and change, and this does look like a potential evening star. If we have this longer wick to the north, the SPY looks like, you know, we could have an evening star with a bearish decision. The Qs looks like we could have an evening star with a bearish decision, but we won't know that until next week, right? If we see that there's more directional moves next week into the end of the quarter, then that makes some sense. I mean, there's some inefficiencies there on that last weekly decision move that maybe the Qs come back a little bit, but, you know, here I am, like, does it go down? Maybe it does, maybe it doesn't. I'm going to trade it both ways. I'm really
What is an
not
evening
trying to
star?
short. What's that?
What is an evening star?
Evening star? I was just gonna make a joke, be like, you know who, Billie Eilish is? Just kidding. Anyway,
That
an
would be
evening
really
star
bad.
it's a topping pattern. That's a terrible joke, I know. It's a topping pattern. So you have a decisional candle right here that'd be bullish, okay, and then you have an indecision candle up here that shows that the bulls have stopped their run, and then you
Oh,
have
like
bullish
a pin
decision.
bar?
Yeah, and then you'd have a bearish decision here. So basically, an evening star looks like this. If I paint this, let me try to get this colored in. So if you paint this green, okay, that's your bullish decision bar, and then you paint this one red, that would be your bearish decision bar. So that's what an evening star looks like. Is you have decision, indecision, followed by decision. So that's an evening star, which is a topping pattern, and then you flip this around. If you wanted to look for a bottom, then you would do here's your bearish decision. And then you have your bullish. Oops, let me change the color. Then you have your large indecision. And then you'd have your bullish decision. Like that.
Okay,
So
gotcha.
there. So that would be your, that's a morning star. So let me label these so everybody knows. So this would be evening star. Put this in black. So evening star and morning star. So these are just candlestick patterns that, in higher time frames, they matter. So when I see the SPY and the Qs this week are showing a bit more of an indecision, I'm wondering if there's a follow through to actually get a bearish decision. It doesn't have to be immediate. It's not always like, 1, 2, 3 candles, that's formation. If we trade with a little bit of indecision here, but we don't break the highs, there could be bullish decision, indecision, 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 and then a bearish decision. It's still the same pattern. But for
Well, I've seen
textbook
that
drawing,
on
this is what
daily
it is.
time frames. I've seen
Yeah.
that on the SPY where it had indecision for like 3 days, where it closes at where it opened, looking just like that. But then it rips higher.
Sure. Well, I mean, it's not 100%, dude. I mean, I'm not looking at this like, that's why I'm selling. It's like, it's just a pattern. It's a potential. I still think you're right we have a bullish bias. There's nothing about the structure in these markets that are showing breaks, right? Are we vulnerable? Sure. If Nvidia sells off, it's going to drag the market lower. If Apple and Microsoft sell off, they're going to drag the market lower. But
Yeah.
if we mute this move for a 1 to 2% dip, just like we've seen all year, maybe that's all the market needs. Or if this market just kind of, drips lower, let's say it just drips lower into the CPI gap, that might be enough there, Frank, to then really excite the bulls once again, because it's like, cool, we got a 3 to 4% dip, maybe. But 1 to 2% has been this. Like that was 1 to 2%. That's a bunch of 1 to 2%. Tiny, tiny, tiny little pullbacks.
Yeah.
So,
not
tiny
very
little
big
patterns.
moves in the grand scheme of things, but
Nope. And
yeah, if
just
it does
melting up
pull
higher,
back
man.
too, if it comes back to that support or the trend line,
Yep.
that's probably just another setup.
I think so too. And look, man, we're at the halfway point of the year. There's a lot more setups ahead, right?
Oh, yeah.
So I mean, by the time you and I have this conversation towards Christmas, we can let's remember this. Let's remember June 21st, and we'll talk about, if Frank, all you did was just buy calls for the rest of the year, something tells me you'll be okay, right?
Yeah, I
Look,
just
even
might.
worst case. Yeah, I mean, if worst case scenario is you have defined risk on each one, right? You pay a couple dollars for a call option, you lose. Pay a couple dollars for a call option, you lose. The odds of you losing over and over again for the next 6 months, probably very slim.
Yeah.
If the market's going to be higher, if every major investment bank and analyst out there is talking about, SPY going to 560, SPY going to 600 or 600 plus, dude, you're doing exactly what you need to do. Just focus on the upside, focus on the path of least resistance, define your risk, and guess what? You're probably going to be fine.
And
Like
it's going
trading
to
does
be
not have to be
cheaper
hard.
than for everyone, but it'll just be easier for me because if I do an iron condor, it's going to cost me way more than to buy like a $2 option play.
Mm-hmm.
So
Spot
I'm
on.
just probably going to do that, and I don't think the market is going to see a crash this year just because we're at this election phase coming up in November.
Yeah.
It would just be I don't know. I don't think it's likely that would happen. But yeah, I remember we talked about this a while ago.
Mm-hmm.
Come 2025, we can start seeing a more downside risk.
For
For
sure.
now, it's just how far will it pull back before it rips higher?
Yeah.
So that's just all I'm focused on right now.
So one trade. So couple thoughts. Well, I guess you're talking about like, a couple dollars on a call option. One trade that I like to take if I want to just be bullish every week is it's a debit spread, but you essentially straddle price. So if I bought a 540, this is going out the next Friday. This is just an example. If I bought a 540 and I go equidistant, so we're trading at 545. If I buy a 540 and I space that out, so I'm $5 away from current price, and I sell a 550 call, 540 to 550 is bullish, right? Like it's a bullish debit spread. If price goes up and up and up, my 566 debit with the actual built-in value, because I have intrinsic value because I'm buying the 540 call, I could take this 565 debit and have this thing, if we drift up towards 550 again, this is going to be showing $8 or $9 of actual credit. So I know I'm paying for it up front, but this is a very easy way for a bullish week to see this pay out really nicely. And the nice thing is if I'm wrong on this trade, you can actually flip this into a butterfly. So again, I'm going $10 out. If I were to sell a 530, right? I sell a 530 and I buy another 540. Now I switch this into a butterfly trade. Guess what? My butterfly gives me a chance to get out of the trade with a net position of maybe saving the trade. Does that make sense? So there's a plan A that's, bullish bias. If we're bullish on the week, you should be able to maintain that intrinsic value to the trade. And then you have but the butterfly is a plan B just to help you get out of the trade and mitigate it with that potential like lottery play built into it. So, but what would have to happen? We'd have to sell off 1% next week, and this trade is all of a sudden in jeopardy, right? If it stays where it is, and we just drift at the lows and end up higher for the week, this trade gains every single week. So, it's costly, but you're doing it a little bit more where, week to week, you're getting like any type of drift upside. Like even if this was let me get rid of this trade here.
Well, I like that because if we have a week where it's just very low volatility,
you stay where you are. Like you maintain value in the trade. Does that make sense? Yeah. That's why I like it, because if price goes nowhere and we sit around 545 all next week, I'm going to be down about 60 cents. That's a very tolerable risk considering, a call option that doesn't work out can go to zero. This trade, because I'm in the money, I'm getting that time premium. And if we just stay where we are, I maintain that time premium. I maintain that actual like intrinsic value, the actual real value of the option. And if it goes up a little bit, this actually pays. So this is also a very easy trade to do week to week without having to pay an arm and a leg for it. I mean, honestly, dude, it's Friday. We're talking about this next week. It's like this trade is freaking cheap. Kinda. It's already cheap. But it's because the IV is it's been low. It's like the VIX is low. The IV ranks for the most part of the indexes are low. So anyway,
what is
crazy
it like
stuff,
to
dude.
the downside? How much more expensive would it be if you try to go?
So if I bought, let's say I bought the 550 put and then I sold the 540 put, it's cheaper. Well, hang on. Let me do this. Wait, that's cheaper. I buy the 549. It's cheaper. Interesting.
So puts are cheaper.
Well, they're a little bit cheaper, yeah. So we have some put skew when it's a little bit cheaper. I mean, you're definitely being asked to pay for most of the implied volatility. So with an implied volatility move around $6, I'm paying $5.60. It's right there. I just look. I think right now, if we're going to keep the VIX within 10 to 15. I think you're better off buying options than you are selling options. If I'm selling options, which it works in any environment, but you got to be quicker with your profit targets. I think you got to take those 15 to 25% if you're selling, or you're selling options to like sell puts and own the shares, or sell calls to cover your shares and protect yourself, lower your cost basis. I mean, I think just straight up selling options week to week or day to day. It depends on the strategy, but you're better off in a higher IV environment being an option seller because you can go out past that standard deviation and get a lot of credit for it. Right now, it's like they're making you, if you want a decent amount of credit, you're going on those verges of like, you're doing 25 and 30 deltas, and those are threatened a lot. Like the probability of touches, the probability of closing, in the money, obviously gets a little bit higher when you get into those higher deltas. So for me, as I sell and it's kind of delta specific, I'm looking at like 15, 20 deltas. If I do covered calls, I'm trying to, go to a 15, 20 delta out of the way because I want price to still appreciate. So anyway, But right now, like you said, if you're buying a put, it's actually a little bit cheaper to buy the put and play it that way. But even like I said, if I bought the call and then I make it equidistance, we're at 5, so I do 540, so I'll sell the 550. I mean, that's not bad, dude. If I paid 550 and this market drifts up to the highs again, this is going to be a $10 option by next week. If we went up to retest the highs, this is a $10 option that obviously I'm not going to make $10 on it. But if I turn this from a 548 debit into a $10 credit, you can see here my max loss is exactly what I'm paying for it. But the upside of, if we test the highs, I get pretty much, I mean, it's a 70 delta roughly. So I'm not getting dollar for dollar. I'm not getting the full move. But if it goes up, $5, I'm getting 70% of that every single day. And by the end of the week, it's going to be pretty much 100 delta. It'll be like 95 to 100 delta or close to it. Yeah. So it's a simple way to trade. Like I said, you like your 1 or 2 days out. I like this one where I can go a week out and it's not that expensive. If the market stays where it is, I have that value built into it. If it goes up a little bit, I'm getting, again, hit my profit targets, 15 to 25%, take it, be done with it, move on.
You're right.
Not bad.
Yeah, as a simple call or put option would expire or lose value over time, you're set up with the sell call as well. So if price drifts, you're doing fine.
Yep.
But yeah, Chris, I think I'm going to get off. I'm kind of tired.
You're tired? Dude, I got home last night. I got home at 1 a.m. last night, dude. But I gotta send you and Drew and James the picture. I got this fancy club set that I'm working with. I'm building a club set right now for this guy that's picking it up tomorrow, and they're pretty sick. So I'll send you guys a picture. I had to take them all apart and put them back together. So that'll be the final project, but it's been chipping away at it each week. So I gotta go too. I gotta jump into my other trading room. But as always, happy Friday, man. Nice to be with you. Thanks for hanging out today, and happy Friday, everybody.
Yeah, happy Friday. Thank you, Chris. And yeah, I'll talk to you Monday for sure.
All right, sounds good. Have a good weekend, everybody. See you soon.
Thanks for tuning in to today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. Also, we're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. In the live stream chat and description below, we'll drop a link to apply to be a live stream guest and join in on the conversation. We hope to have you on soon. That's all for today. Trade safe, and we'll see you next time.